Kicks 105.5, Joe Nichols, hard to be cool. It is 7:47. Wow, it's an airplane. It's 7:47 on a lovely Wednesday morning in the studio. Mr. Barrett, you tried to tell me what we were going to talk about, and I distracted you.
Yeah, you had a lot to tell me, so I just shut up and listened.
What were you going to talk about?
So I was weighing a couple things, and I'm going to go back to what comes across our desk. I think this is a fantastic conversation to have. So,
All right.
So many times when we see new folks, I'm talking folks who are insured elsewhere.
Right.
You know, a lot of times they're talking about they're not happy with their rate with their current agents. They're shopping around. This happens very consistently. They talk about how rates go up without, any real explanation, so on and so forth. And I thought, out of fairness to all of us, because I know that happens to us too, it has to, that, on a homeowner policy, regardless of whether we make a change to it, the company makes a change to it or not, year to year to year, that will increase regardless.
What kind of percentage? Is it 2%, 3%, 5%?
Certainly not tremendous. The bigger the percentage is more linked to the coverage for the house.
Okay.
All policies have a built-in policy inflation guard.
Okay.
So anywhere between 3 and 8% increase in the value that you're insuring your home for every year, and as a result, you're seeing an increase in your premium. What does that mean? It means you could potentially get to a point where you are overinsured. And, of course, so many people in my industry say, oh, you're never overinsured. Well, there can be that potential case.
So that happens automatically?
Automatically, year to year.
Regardless of whether or not your property is rather actually increasing in value.
Right. And it's a good thing to have in the policy because it does work towards preventing you from being underinsured.
So
but it does also go the other way where it can put you beyond where you necessarily need to be. I'll give you a great example. I wrote some folks recently who were with the same company for many years. And when I wrote them for almost $70,000 less than what they were insured for previously. But I think they were with this other company for maybe 12 years. And so for 12 years, it was just boosting the limited coverage of the home.
So should people every 3 to 5 years go through and reinsure?
Not reinsure, just take a look. We do the same thing. Just take a look at your policy and go, all right, can I rebuild my house for X? Or is that adequate? Is that too much?
Yeah, but I mean, when you start a new policy, they look at the tax that you're paying on the property.
Nope.
They don't.
No, we do evaluation based on the footprint of the home, the materials of the home, the quality of kitchen, quality of bathrooms, number of bathrooms.
So does that mean that when these increases happen, that you can go in and manually override and reduce it?
That's a big 10-4.
You can.
Absolutely. It's your policy. You can certainly call the company and say, I don't want,
Why did you jack this up?
Yeah, I really would appreciate the opportunity to insure my house for what it's replaced for.
Okay.
Don't forget, a lot of these policies have built-in policy and expanded replacement cost endorsements, which instead of, say your house is insured for $100,000, instead of the policy paying 100% of what you're insured for, which is $100,000, it would pay 120, maybe even in some cases, depending on the company, 125%. So you're looking at potentially another $20,000 to $25,000 boost, if necessary, to rebuild with like kind of quality. Does that mean you should insure for 20 to 25% less than the replacement value of your home? No.
Right.
But certainly you don't need to be overinsured. It's a great dialogue to have with your carrier. And on the alternative front, if you're shopping for auto, we had this happen. My wife actually had a client who said, hey, look, I'm going to go with this company. It was one of the online carriers, not naming names because they have huge lawyers.
You don't want to mention Geico or Progressive.
Never.
Right?
Never in a million years that first one that you just said. And my wife said, well, I understand. Absolutely. Savings is savings. We certainly think that, in the interest of savings, if you want to do that, we understand. Do me a favor. Because we research these companies. We research how their websites work, what kind of coverages they're quoting. This particular person had some great discounts. There was quite a difference in cost. So my wife said, just tell me what you have for coverage. The client emailed the quote to my wife. My wife said, well, it's missing medical payments. You have absolutely no medical payments coverage on the policy. They're quoting you state minimum coverages for liability. State minimum coverages for uninsured motorists. This policy is about a quarter of what you have with us currently. Can we shop you in our office? Absolutely. Go right ahead. My wife quoted, got her sufficient coverage, and saved her money. So there's a benefit towards saying, look, I'm shopping around. I know you have other carriers. Let's take a look and see if somebody else can do something better for me in your office. If you like your agent. If you don't, and you just want to shop, or you don't like your carrier and you just want to shop, that's fine too. But there's just so much going on. There's so much opportunity with your existing agency.
Yeah, so if you do apples to apples,
Right.
You can meet it or beat it.
Yeah, I mean, very seldom do we lose somebody apples to apples. It's always cost. There are occasions where folks have fantastic rates with other carriers for cost, and that's awesome. And I certainly recommend that they make the change if it's economically viable for them. But always, always make sure you're not sacrificing coverage for payment.
There you go.
Yes.
You got it right here. That's why this show is called Good Policy.
Absolutely. Not mediocre policies, not cut your rate in half policies, good policies.
Good Policies brought to you by the Barrett Insurance Agency, online at thebarrettagency.com.
And on Facebook, Barrett Insurance Agency, and our phone number, 748-5224.
All right, we'll talk next week.
Have a great week.